times it is scary to see at what pace market has moved from 20 to 21,000. It's been just few days, So I don't think we can maintain this pace.
JP Morgan is overweight India, looking forward into 24.
Top investors and market experts are upbeat on India, even as they remain cautious about the recent rally. Bulls take a breather on the Lal Street, snapping a 7-day winning streak.
You may have to wait till after the new government comes in July, will be the next full budget, July 2024.
Finance Minister Nirmala Sitharaman says that the upcoming February 1st budget is unlikely to have spectacular announcements as it is a vote on account. Adds that things will have to wait till the regular budget in July. The government is working on a new EV manufacturing policy with an eye on wooing companies like Tesla and Vietnam's VinFast. Sources say that the new policy may look at reducing import duties temporarily. Government officials say that no decision has been taken yet. Sugar stocks under pressure as the government curbs ethanol procurement by oil marketing companies. The move is aimed at keeping sugar prices in check as the overall output is projected to drop 8% this year. Israeli forces make advances in South Gaza, claim that they have surrounded the house of Hamas leader Yahya al-Sinwar. United Nations chief invokes a rare clause in the charter, appeals for a humanitarian ceasefire, says that Gaza's humanitarian system was at risk of collapse.
Been deeply opposed to crypto, Bitcoin, etc. If I was the government, I'd close it down.
JP Morgan's Jamie Dimon lashes out at the cryptocurrencies at a congressional hearing in the US. Says where was the government, he would shut it down. Bitcoin prices have more than trebled since start of 2023. Paytm shares plunged 19%, marking the worst fall since listing day. A slew of brokerages downgrade their outlook and cut the target price, but 11 out of 15 analysts continue to maintain the buy rating. Network 18 plans to merge TV18 and E18 with itself and consolidate the media business. 172 TV18 shares will fetch 100 Network 18 shares. Every E18 share to fetch 19 Network 18 shares. Congress's Revanth Reddy takes oath as Telangana's new Chief Minister. Mallu Bhatti Vikramaka is sworn as the Deputy CM. Congress President Mallikarjun Kharge and senior party leaders including Sonia Gandhi, Rahul Gandhi attend the swearing-in ceremony. Well, CNBC-TV18 is embarking on its 25th year since the inception. We would like to thank all of our viewers and for your trust and support. We promise to live up to it. Now, good evening and thank you so much for joining us on Business 360. I'm Ashmit Kumar. Let's take off with a quick look at the stock market action for the day. Now, the bulls took a breather on the Lal Street. A 7-day winning streak has come to an end. The Sensex lost over 100 points and the Nifty lost over 30 points. The Nifty Bank Index managed to end with marginal gains. Mid-caps, meanwhile, managed to buck the trend. The mid-cap index ended with gains of over 0.5%. Top investors and market experts are bullish on India, even though that they are cautious about the recent rally.
At times it is scary to see at what pace market has moved from 20 to 21,000. It's been just few days, So I don't think we can maintain this pace. We need calibration, otherwise wrong things start happening, wrong kind of trades start happening, wrong kind of money starts coming in. So I think we need a little breather. But I don't know what will happen in the short run in the market. Digital era is there, so we have companies which can grow very rapidly. So the complexion of top companies can change the way it has changed in US. I think there is a chance that here also we may find 30-40% growth for these kind of companies, a new normal altogether.
JP Morgan is overweight India, looking forward into 24. The backdrop for that is a combination of growth, which we've talked about on prior programs, but also recognition that India is running the highest corporate ROE out of any country in Asia right now. We do see opportunity in the large cap space, particularly in the financials and some of the consumer names. So we do see the potential for the market continue to roll from here.
Every year, FIIs have bought because they also have growth in their AUM because of worldwide growth, some allocation from this sovereign, this, that, whatever. Now the question is whether it will be in full force. The reason for it being in full force might be because of their losing a lot of money and confidence in China. So if that reallocation happens, then the force becomes a real big force. Otherwise, anyway, they should be not net buyers, even in normal situations. Now the difference is there's a domestic buyer against it. So if both buy, then is where the fun starts, which is sort of we are all playing for.
Well, here's an important trigger. Sugar stocks were under pressure in trade today after the government curbed ethanol procurement by oil marketing companies. This move is aimed at keeping sugar prices in check as the overall output is projected to drop 8% this year. Sonal Bhutra now joins us with more details. Sonal, tell us, what are you picking up?
Thank you so much for that. Well, it has been notified that the government has asked mills to not use sugarcane juice for ethanol output for 23-24. Remember, it's only sugarcane juice which is not allowed. Companies will be able to actually procure or supply ethanol for existing offers received by OMCs from B-heavy molasses, which will continue to make ethanol. Now, this allowing sugarcane juice route to produce ethanol, it would result in lower diversion towards ethanol, and that is something which the sugarcane stocks are under pressure for. Now, DAM Capital had written a note earlier today because earlier the idea was, and the report suggested that it would be for both sugarcane juice and bee molasses, but the final policy is slightly on the positive side, where only sugarcane juice is not allowed. They said sugar production in Maharashtra and Karnataka is likely to decline by 30%, and this would result in India-level gross sugar production of less than 32 million tons. Now, sugar companies, they've already contracted for ethanol supply for 6 months, starting from November to April 2024, and this measure would result in significant reduction in ethanol volumes for FY25. They believe that these measures are, of course, temporary because of lower sugar production that we've been seeing and higher sugar prices as well. And ethanol production from June, from the juice route, would be restored in the 2024-2025 season. However, they calculated some amount and they say it would impact ethanol volumes by 30%. And do remember, sugar companies get a big margin coming in from ethanol production only. Overall earnings estimates for FY25, they say could come down by 10% because of this particular policy. They, however, say that sugar prices are likely to remain at the 38 rupees per kg mark. There is lower sugar production and also low carrying sugar inventory at the start of the year. However, they say government could increase prices of C molasses so that can be used to produce ethanol, and that would be something which would give higher margins to sugar producers. But yes, overall it has come as a bit of a dampener for sugar companies.
Right, Sonal, thanks a lot for that. Now, Finance Minister Nirmala Sitharaman is speaking at the Rajya Sabha, responding to the debate on the economy. Let's go across straight to Rajya Sabha.
And also the marine products. So India is the second largest. Now, second largest again, manufacturer of mobile phones, producer of crude steel. In 2022 alone, sir, India alone registered an increase in production, while Japan, China, Russia, and US all witnessed a drop. They are the major producers. They see a drop in production, and we see not only see a growth, but we've reached the second largest producer status. Coal producer, second largest. Aluminium producer, second largest. And also, India is the second sought after manufacturing destination globally, and this is because of the research which comes from Cushman and Wakefield. So the third position, I'll stop with the third, but then, and also one more on the fourth. Third position, so India has reached the third position in being the biggest producer of fish and fish products, fish-related products. 8% of global production happens here. Startup ecosystem, third largest. Automobile market, third largest. Pharmaceutical industry, third largest. Power producer, third largest power producer. Limestone producer, third largest power producer. When I say this, I'm just taking my mind picture back to that one day when the grid collapsed over the western part of the country, and we were running short of technology to handle it, and we also had shortfall elsewhere in the country, but no more of that. Today, India is the third largest producer of power. India also has, especially when we're talking of climate and green action and so on, ranks third in forest gain area. India has added 2.66 lakh hectares of forest area every year between 2010 to 2020. So 2010, I'm including 10, 11, 12, 13.
Well, that was the finance minister in Parliament earlier today. She was, in fact, at the CIA event as well. She spoke there earlier today. Speaking to corporate leaders, the finance minister said that the union budget on the 1st of February is unlikely to hold any spectacular announcements. The finance minister said that the budget is only a vote on account to meet the expenditure of the current government till the new one is in place.
I'm not going to play a spoiled sport, but it is a matter of truth that the 1st February 24 budget that will be announced will just be a vote on account, because we are in an election mode. An election happens during this summer, the coming summer. So the budget that the government presents will just be able to, or would just be a budget to meet with the expenditure of the government till a new government comes to play. So, and that budget, following the British tradition, is called vote on account. So no spectacular announcements are made at that time. So you may have to wait till after the new government comes in July, will be the next full budget, July 2024.
Well, with that, it's time now for a short break. But coming up, the government is working on a new EV manufacturing policy with an eye on wooing companies like Tesla and Vietnam's VinFast. Details when we come back.
CNBC-TV18, embarking on a quarter century of excellence. Embarking on a quarter century of excellence.
Welcome back. Now, the dream run in the crypto market continues. Bitcoin prices have more than trebled since the start of 2023, followed by Ethereum, which has risen over 12%. The rally comes on the back of the growing excitement that a Bitcoin exchange-traded fund might get approval soon. However, JP Morgan's Jamie Dimon has expressed his mistrust of digital currencies, saying that he'd shut them down if it was in his power.
I've always been deeply opposed to crypto, Bitcoin, et cetera. You pointed out the only true use case for it is criminals, drug traffickers, anti-money laundering, tax avoidance, and that is a use case because it is somewhat anonymous, not fully, and because you can move money instantaneously, and because it doesn't go through, as you mentioned, all these systems have built up over many years, know your customers, sanctions, OFAC, they can get bypass all of that. If I was the government, I'd close it down.
Well, back home, the union government is working on a new electric vehicle manufacturing policy with an eye on wooing pure EV players with a global reach and scale. Now, we learned from sources that the new policy may look at reducing import duties temporarily. Parikshit Luthra is joining us now with more details. Parikshit, give us a sense, what does the government have in store for the EV space? What are the players that we're hoping to attract?
Well, the Indian government and Elon Musk's Tesla have been in talks for some years now, and we believe that now the talks are in a final stage and possibly there could be an announcement by the end of January. What Tesla has said, they are willing to commit up to $2 billion for the India market as far as investment in manufacturing goes, but they are seeking a temporary duty reduction from 100% currently on fully built cars to 15% on 30,000 cars per year for a temporary 3-year period till they are able to begin manufacturing. India has made it very clear that no policy concession, no policy tweak can be for Tesla alone. If it happens, it will be for the entire EV industry. So we believe that top 5 leading luxury car makers have been consulted by the government. They are now working on the contours of a new electric vehicle manufacturing policy, where unlike the FAME scheme or PLI, the concession, the duty concession on fully built cars, import of such cars would be dependent on the investment that you are committing to. So, for example, if a company commits to investing a certain amount of money for the India market, then the Indian government could give a concession from 100% to 15% for a 2 to 3 year period till the company begins manufacturing. That company may be asked to submit a bank guarantee, and the government would be liable to encash that bank guarantee in case the company does not begin manufacturing within a stipulated period. But this is only being considered right now. No final decision has been taken. We reached out to our sources in the government. They did not comment and said no final decision has been taken on deliberations. But there is a lot of concern among Indian automakers as well as to what kind of impact will this have on localization push. But all of this is being done. This new policy is being considered to make sure that the likes of VinFast, Tesla and global EV manufacturers get a somewhat level playing field when they enter the India market and don't come to India with 100% duty on sales operations from day one.
Right, Parisha, thanks a lot for that. The industry will be watching that trigger very carefully. But with that, it's a wrap on this edition of Business 360. Thanks so much for watching. Stay tuned to CNBC-TV18. The news and updates continue on the other side.
CNBC-TV18